Thank you for joining us today. The following presentation is from a webinar titled Maximizing Community Impact through EITC and was originally produced on May 15, 2013. The presenters are Michael Eby and Greg Lowe with McKonly Asbury. Enjoy the presentation and visit us online at www.macpas.com for future events and webinars.
Hi, good afternoon. Welcome to this afternoon's webinar on maximizing community impact using Pennsylvania's EITC program. My name is Greg Lowe, and I serve as a partner with McKonly Asbury and Chief Operating Officer, and I'm joined today with my colleague, Mike Eby.
Hello, I'm Mike Eby, and I work at McKonly Asbury as well as a tax supervisor. I've been very involved the last couple of years in the Pennsylvania Educational Improvement Tax Credit Program, helping our clients be able to maximize their credit and their contribution to the community by using this program.
Today, it'd be our privilege to just take you through a few brief slides describing the program and how you might use it. If you're like most businesses, if you're like our firm, we're always looking for ways to maximize our impact in the community. The EITC program has been one of those ways. So whether or not you're a business owner or perhaps like me on a nonprofit board of a private school that can benefit from this program, we hope there'll be some great information for you today, and we look forward to taking you through it. Well, let's get started. Mike, what the heck is the EITC program?
Well, Gary, that's a good place to start this presentation. Let's move on to a few slides here. As Greg mentioned, we put together this informational webinar on the EITC program in order to raise some awareness in the business community that this credit's out there. It's a very good way for local business to get involved in their community. I think a lot of businesses are already involved in community and are contributing to local organizations to promote education. However, discretionary funds might be very limited for certain businesses. So Pennsylvania has kind of provided this excellent way for businesses to get involved with local nonprofits. It kind of promotes both education as well as business development. Now, this isn't a new program that we're talking about today. It's been around for a number of years, and many businesses are already familiar with this credit. However, we're going to talk about a few things today that have made this program a lot more popular the last couple of years because the credit's become much more relevant for many more taxpayers. Before I go too far, I do want to make one note. For the Educational Improvement Tax Credit Program, I'm going to start calling that the EITC program. And I want to make a note that shouldn't be confused with the federal EITC program, which refers to the Earned Income Tax Credit for individual taxpayers with lower income. This program has nothing to do with that. So I just want to make that one note before we start. But let's begin with kind of giving a little history about the program. The PA EITC program was established in 2001 as a means for businesses that pay certain Pennsylvania taxes. And we'll get into what those taxes are in a little bit. But it was a way to get a generous tax credit for contributions they made to qualifying K through 12 scholarship organizations or qualifying educational improvement organizations. Later on, pre-kindergarten scholarship organizations were also added to the program as a separate grouping. The program was set up to be administered by the Pennsylvania Department of Community and Economic Development, or in short, I'll start calling that DCED. For the original funding for the program came from the budget, provide for total tax credits of only $30 million, 20 of which went to scholarship organizations, and the other $10 million were allocated to the educational improvement organizations. With the passage of the most recent budget back last July, the 2012-2013 fiscal year, Pennsylvania allocated $100 million to the program. $60 million going to scholarship organizations, $30 million being allocated to educational improvement organizations, and the other 10 to pre-kindergarten scholarship organizations. Here in and of itself, that's one big reason why the program has become much more popular the past couple of years. There's a much larger piece of the pie to go around now to other taxpayers that traditionally haven't been able to get this credit. Now, in consideration of participating in this program, I would say the first place to start is to go to DCED's website, and that's at newpa.com. And we're going to have that information at the end of the presentation, so you will be able to have that web address along with a phone number for the DCED. The DCED website provides an all-inclusive list for each type of organization that qualifies. There are literally hundreds of organizations that are qualifying that list. So there are chances that you might already have an organization on that list that you're contributing to. And then you could actually increase that contribution by receiving a corresponding tax credit, which we'll get into that discussion in a little bit. Now, if there's an organization that you would like to give to that's not on the list, and you believe that they do similar work in the education community as some of the other organizations on the list, I would definitely ask that organization to reach out to the DCED about applying to get onto that list. And there's information on how to do that on the DCED's website as well.
Well, educational institutions have an obvious benefit in receiving funding that they can use for things like scholarships, and obviously that makes a huge impact on their budget. But what are the benefits to the businesses that participate, Mike?
Greg, there are a number of benefits that businesses can derive from this credit if they're participating in this program. Let's start with a few that everyone kind of already knows about. As with any contribution you make to a community nonprofit, you're helping to build that local community where your business has a footprint. Secondly, a business can build some goodwill in the community and help get its name out there. And then thirdly, a lot of contributions that are made to qualifying nonprofit organizations are also eligible for a deduction for federal income taxes. All these are benefits that are applicable to any charitable contributions, whether you participate in the program or not. What sets this program apart through this increased benefit is also receiving a tax credit from the Commonwealth of Pennsylvania. Now, keep in mind, a tax credit is a dollar-for-dollar reduction of taxes. So that can be used against certain Pennsylvania taxes, and we'll get into that in the next slide. Now, what exactly is the credit? For contributions made to a qualifying K-12 organization or a qualifying educational improvement organization, the credit will be either 75% of the contribution or 90% of the contribution, depending on whether the business makes a 1 or 2 year commitment. Now, obviously, most businesses find it most beneficial to commit to the 2 years because then they get the higher tax credit percentage for each of those years that they contribute to. Contributions to the pre-K scholarship organization have slightly different terms. This would be a 1 year commitment to the program. The first $10,000 that you contribute to one of these organizations is eligible to receive a 100% tax credit. So literally each dollar you gave to the pre-K scholarship organization, PA will match that with a reduction in your state taxes. You will receive a 90% credit for any contributions after that initial $10,000 for a maximum credit of up to $200,000 for that particular type of organization category. In total, you can contribute up to $750,000 to the EITC program in any one fiscal year, and it can be to any of the 3 different types of organizations. And within each of those types of organizations, you can contribute to many different ones of organizations within them. So you can kind of split your contribution around to many different organizations and definitely maximize your impact with quite a few different organizations.
Mike, I already get the idea then that to get a tax credit, I must be paying a tax that qualifies for the credit. So what taxes am I looking for specifically?
Yes, you must be authorized to do business in Pennsylvania and be paying Pennsylvania taxes. Here's a list of Pennsylvania taxes that currently qualify for the EITC program. As you'll see on the list, there are quite a few taxes that do qualify. I'm not going to spend a significant amount of time talking about each one of these different types of taxes, but I did highlight 2 key tax types on there that a number of our listeners would be subject to, and that's either the C corporation corporate net income tax, and that's on the earnings paid by C corporations, or the personal income tax, which can be paid by individual shareholders, individual partners, or individual members of a pass-through entity. And I'll actually run through an example for both types of taxes a little later on. I also just want to briefly highlight the very first tax on the list, which is the Pennsylvania capital stock or foreign franchise tax. Now, corporations including C corporations, S corporations, and LLCs are subject to this tax. Now, if they're incorporated in Pennsylvania, they're subject to the capital stock tax. If they're incorporated outside PA, they're subject to foreign franchise tax. Same rate, everything, it's just the difference in the name. The tax is based on a combination of owner's equity and a history of the average book earnings over the past 5 years. So therefore, even if you have a tax loss in the current year, you might still be subject to capital stock foreign franchise tax. At one time, this would have definitely been a tax that you would want to have kind of considered into your equation when wanting to see if you're going to participate in the EITC program. However, over the past few years, the capital stocks tax has been phased out greatly through a tax rate reduction. Even for tax years beginning after January 1st, 2014, the tax is going to be completely gone. So that's why I really don't even put this into the equation anymore. It's not going to play much of a factor in determining if businesses will want to contribute to this program. The other tax types are more industry specific. You'll see Pennsylvania bank shares tax on that list. That's obviously a tax on financial institutions. Traditionally, banks have been a very strong participant in the EITC program. One thing to notice is that taxes that are not on that list are trust fund taxes. These could include sales tax, which you're collecting from your customers, or any taxes that are withheld from your employees. The credit is not applicable to be utilized against these trust fund taxes.
Mike, I know you're an accountant, so exactly how much is this going to cost me? Can you take me through a couple of examples of how this would work?
Sure thing. I think some of these examples will be quite helpful in illustrating just how beneficial this credit could be to certain businesses. As I mentioned before, I think there are two taxes that most businesses operating in Pennsylvania will be subject to in one manner or another. And I'll give an example for both, but let's start with C corporations first. Now, again, remember, C corporations pay net corporate income tax, which is a tax on the earnings sourced to Pennsylvania. First column there, we'll look at this calculation, is without EITC contribution. So let's just say there's no contribution made at all. And this particular taxpayer made $300,000 of Pennsylvania income. And now that's before contributions and before state income taxes. So let's say there's no state adjustments as well for sake of this argument. The PA state income tax on $300,000 would be $29,970 because there's a corporate tax rate of 9.99%. That's deductible in driving federal income tax or federal taxable income, which would be $270,030 for federal taxable income. The tax on that would be $88,562. So that's our base example. So now let's look at the what a contribution using the 2-year commitment for the ITC program would what type of benefit that would create. Let's take that same business with their $300,000 of pre-contribution and pre-state income tax expenses. Now let's just say the business makes a $10,000 charitable contribution, and the contribution, they received approval and qualified it to a organization that's part of the EITC program. So for federal and state purposes for C corporations, they get that $10,000 deduction. So that'll bring their PA taxable income down to $290,000. We'll take $290,000 times that by the 9.99% PA corporate net income tax rate again, and that'll come out to $28,971. Now, with the 2-year commitment, making a $10,000 contribution, you get a $9,000 PA tax credit. So that will reduce your state taxes by $9,000. So our net state tax expense will be $19,971, and that will be what's deductible against federal taxable income. So if we look at the adjusted federal taxable income after state taxes, after contributions, we're looking at a very similar dollar amount. In fact, it's only $1 difference. So that'll generate exactly the same amount of federal income tax expenses, $88,562. So federal is a net. PA income tax expense savings will be $9,999. It's the $999 less of PA state income taxes, plus the $9,000 tax credit. So net, what you're going to end up paying throughout the program, if you make that $10,000 EITC contribution, after the state tax benefit of doing so, it only costs you $1. Now let's move on to an example using a pass-through entity. Again, this could be either an S corporation, a partnership, or a single member LLC. Now, all these entities have owners that are subject to Pennsylvania personal income taxes if they're individual owners. And they'd be paying personal income taxes on their share of business income passed through to them. Now, keep in mind, even though we're talking about personal income taxes, the EITC is not eligible for sole proprietors. So we're strictly talking about personal income tax liabilities from owners of pass-through entities. The credit gets passed through to the owners in the same proportion as the income from the entity is passed through to the owners. So let's use a very similar example as the C Corp example. We'll say it's a business that has net taxable income of $300,000 without making a contribution and prior to calculating income taxes for Pennsylvania. Now, for Pennsylvania, the state income tax for individuals is 3.07%. If they're all resident owners, the income gets passed through to the individuals and the tax is paid at their level. But to kind of show the whole net effect of how this calculation will take place and what the net cost would be to the actual individual owners, we're going to show that the state tax expense is being included in our calculation. So what then in the owners, what their federal taxable income would be $290,790 because subject to the AMT or other limitations, that 9210 would be part of their itemized deductions on their personal return. Now, if we just use a 35% marginal bracket for simplicity's sake, obviously there's different brackets, and even for 2013, the highest marginal rate is much higher, or is higher than 35%. And then there's also the new Medicare passive investment tax. But we're just going to assume, for simplicity's sake, 35% marginal bracket. That would be $101,777 on that $290,790 of taxable income for federal. Now let's take that same example, same business, but using the 2-year contribution to the EITC organization. So we have $300,000 of business income prior to contribution and income taxes. The PA state income tax expense on that would be $92.10 for individuals. Now, the reason we're not taking out the contribution in our calculation of state taxable income for this example, opposed to the C Corp example, is because for personal income tax purposes in Pennsylvania, charitable contributions are not deductible like they are for federal purposes. So our PA state income tax will be exactly the same prior to figuring in the credit. However, let's figure in that credit, that $9,000 that will be able to be passed through to these individuals and utilized against their Pennsylvania personal income tax liability. And then we'll also tack in the federal charitable contribution deduction in arriving at federal taxable income. So we have our $300,000, our $92.10 of itemized state income tax expenses, the reduction of the state income tax expenses by the $9,000 credit, and then our charitable contribution deduction, which is also itemized deduction. That would bring us down to $289,790 for federal taxable income. As you can see, very close to the previous the example without the EITC, we're looking at a federal income tax savings of $350. Let's then combine that with the PA income tax savings, which is essentially the credit that we're getting through the EITC, and that's total tax savings then of $93.50. So on a $10,000 EITC contribution for a pass-through entity, they could end up only paying $650 net out of their pockets.
All right, well, the examples seem clear enough, but how bad are the forms I need to go through to get this done?
Well, Greg, the process is rather simple start to finish. I think the toughest decision in this whole thing might be deciding which organization you're actually going to give the contribution to, just because there's just so many organizations to choose from. The initial application is very brief. Traditionally, it was only a one-page application that could be submitted in person at the DCED in Harrisburg. It could be emailed, it could be faxed, or it could be sent regular mail. It was always interesting kind of seeing which method clients preferred to use. Me personally, I always preferred submitting it on behalf of our clients in person because you would get a physical stamp received copy the very first day you submit it. Really, none of that matters anymore, though. Beginning in 2013, all applications must be submitted using the Single Application for Assistance device, and that's found on the DCED's website as well at newpa.com. This allows the DCED to receive all the applications in one database, and therefore I would think that we should be receiving a quicker turnaround in terms of hearing when a business was approved or wasn't approved, because they now have this more efficient method of receiving these applications. Outside of the actual method of application changing, the requirements are very similar this year as they were in previous years. All first-year applicants may begin applying for this credit July 1st, 2013. This was actually a new development beginning last year, because in prior years, entities that were passing through the tax credit to their owners, they could not submit their applications until a week later. Therefore, in most cases, these pass-through entities were rarely approved for these credits. This is the other big change that I talked about that's made the EITC much more relevant for a much broader business base. Now, with the passage of last year's budget, the 2012-2013 fiscal state budget, the beginning date for pass-through entities was moved up to the same date as taxpayers applying the EITC against their entity taxes, mostly C Corps or some pass-throughs that would be applying against their franchise taxes. So picture this, the Pennsylvania legislature passed the budget over the weekend prior to Monday, July 2nd last year. Now, that's actually also the due date for the EITC program for the C Corp applications. The governor had not signed the budget yet on that Monday, but the assumption was that he would. So therefore, there was a mad scramble by these pass-through entities to get their applications in by that day, whereas they were previously planning on submitting it a week later. So hopefully there won't be as much excitement this July 1st as there was the July 2nd last year. Now, I highly recommend applying the very first day of eligibility. It's a first come, first served by day basis. So you can submit your application at 9 in the morning, or you can submit it at 3 in the afternoon, and your application is going to receive the same consideration. However, if you wait one day longer, your odds of receiving this credit are greatly diminished. So I highly encourage you to get those applications in on July 1st. Along with the single application for assistance electronic submission that you're going to have to make, there should be a signature form at the end of the application that you can print off and sign and mail in. This doesn't have to be mailed in right away, but you have to have it mailed in within 15 days after the electronic application is submitted. That's for initial applications. For renewal applications, let's say, for instance, you're renewing a commitment for your second year of a 2-year commitment. You can apply at an earlier date, beginning May 15th, but you can't apply any later than June 28th for that. If you do go after June 28th, you're going to have to apply July 1st, along with the same pool of first-year applicants. So the chances of you getting the credit are then very slim again. For renewal applications, you must also use the single application for assistance this year. And then lastly, new for 2013, businesses that have just completed their second year of a 2-year commitment, they can actually reapply for another 2-year commitment beginning on the earlier day as well, that May 15th date. This obviously gives a huge advantage to businesses that have already participated in this program in the past, as they'll kind of be bumped up in the process from all other first-year applicants.
Okay, Mike, let's say I'm game to apply for this. What are my limits, and what are the deadlines I need to plan for?
Yeah, I think it'd be good to highlight some very key limitations and deadlines regarding the EITC before you consider your participation in this program. We've already talked about the maximum annual credit limitations for businesses. You can only get $750,000 in total for the EITC program credits, 750,000 credits. The maximum amount of that amount for pre-K scholarship organizations can only be $200,000. Now, if you've been approved by the DCED for the program, you'll receive an approval letter from the DCED. It's traditionally only been around 60 days after the application was submitted that you hear back from the DCED. From the date of that letter, you have 60 days from then to make your contribution to the organization. Within 90 days of that original letter, the DCED must receive notification of that contribution from that organization. Most scholarship organizations and educational improvement organizations that participate in this program are well aware of what they need to get back to the DCED and the time frame they need to do it. However, I don't think it would hurt for businesses that have made that contribution to follow up with that organization to make sure they do submit it on time. After the DCED gets the acknowledgement of the contribution, they're going to pass that information along to the Pennsylvania Department of Revenue, and they'll also send a duplicate copy to the business. think another thing to be mindful of is that unlike some of the other tax credits that Pennsylvania offers, the EITC cannot be sold, it cannot be assigned or transferred to any other taxpayer, except, as we mentioned before, passing it through to the owners of those pass-through entities. The credit cannot be carried forward to subsequent years, so that's why you really want to be thorough in calculating your estimated Pennsylvania tax liability. Essentially, the EITC is a use it or lose it type of program in that manner. And then lastly for the slide, there's no utilization restriction. Some Pennsylvania credits, they only allow you to use that credit against up to 75% of your taxable liability. You can utilize the EITC against 100% of the taxpayer's Pennsylvania tax liability. Or in the case of pass-through entities, you can use it up to 100% of the Pennsylvania tax liabilities of those pass-through entity owners. So let's discuss the process for actually reporting this credit on the tax returns. So after you've determined how much you would like to contribute to the program, you've applied with the DCED, been accepted by the DCED, then made the actual contribution to the organization, received acknowledgement of the credit from the DCED. The final task would then be to report the tax credit then on the Department of Revenue tax forms. Credit is available to be used against the liability of the business's qualifying Pennsylvania tax liabilities, as we mentioned before, the tax liabilities that do qualify for this. And they can qualify against the liabilities in the fiscal year that the contribution was made. And just remember, again, the credit cannot be carried over to a subsequent tax year. To be able to pass through the credit to owners of an S corporation and a partnership, you must file a separate election form with the Department of Revenue. As you can see on the screen, it's the PA Rev 1123. And that must be filed by the business's tax return due date, including extensions, of the year in which the contribution was made. You can specify how much of the credit you want to pass through. Now remember, a pass-through entity may elect to utilize some of the credit against the business's capital stock tax liability, and then pass through the remaining amount to the owners. So you can actually specify how much you want passed through. For the amount passed through to the owners, you must also report that credit on the business's PA Schedule OC. This is a form that is included with the business's regular Pennsylvania tax return, either the PA-20S or PA-65, depending on if you're an S corporation or a partnership. The amount reported on the PA Schedule OC is then reported on the partner's RK1, if they're a resident, or NRK1 if they're a non-resident of the state. And then those are pro rata distributed then to the owners based on how they prorate their income. When the owner reports its income from the pass-through entity on his Pennsylvania personal income tax return, PA-40, he will also include the credit from his PA-K1. Now, I mentioned the credit cannot be carried forward to the following year. However, if you're a pass-through entity electing to pass through the tax credit to its owners on the Rev 1123, you can elect to pass through the credit to the owner's current tax year or to the year immediately following the year the contribution was made. But that's a specific election you make on the form. So in that case, you kind of do get an either-or option when passing through the tax credit.
While we're on the topic, are there other programs that could offer similar impact that I should be aware of?
Greg, there is actually one other Pennsylvania credit that is very, very similar to the EITC. And right now, there's been a lot less competition for the credit than there has been for the EITC program. It's the Opportunity Scholarship Tax Credit, or in short, the OSTC. It was created last summer as part of the Pennsylvania state budget. The credit is so similar to the EITC that initially when the program was created last summer, it was dubbed EITC 2.0. Guidelines are very similar to the EITC. I think the main distinguishing factor, though, is between the two programs is that the qualifying organizations under this program must provide tuition assistance to eligible students residing in the boundaries of a low-achieving school. The budget last year allocated $50 million to this program, and so far the program has received relatively little attention from the business community. I think that's why this credit might be another option for businesses wanting to maximize their contribution to the community. If you want to find out more about this credit, you can email me. My information will be at the end of this presentation. Also, DCED's website, thenewpa.com, they also provide some additional information about this credit. As I stated throughout the presentation, here's a slide containing the contact information for the ITC program. Included is the website for the DCED, www.newpa.com. Also, the DC's phone number is also included there, along with their email address, where they could specifically address certain questions that you may have. I also invite you to email me with any questions you may have to my email address that will be on the last slide of this presentation. I would mention closing to our nonprofit organizations that are listening to this presentation. If you're an organization that believes could fall under one of these categories of qualifying organizations for the program, I would highly encourage you to contact the DCED. It could significantly increase your contribution revenue and help maximize your efforts in the community. And with that, I'll turn that back over to Greg.
Mike, thank you very much for sharing your expertise with us today on the EITC program.
It was my pleasure, Greg.
Our contact information is on the screen. If we could be of any service to you as you evaluate using this program, please don't hesitate to contact us. Have a great afternoon.
Thank you once again for joining us for this presentation produced by McKonly Asbury, Certified Public Accountants. We hope you join us and participate in our upcoming events. You can stay up to date with news and learn about our upcoming events by visiting us online at www.macpas.com. Thanks again and have a great day.